welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin, I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, of the fintech unicorns that have proliferated in Europe in recent years, Revolut and Zego are probably among the best known. But to realise their visions in banking and insurance, they needed investors. VCs like London-based Balderton, which invested in both of them. Rob Moffat is a fintech-focused partner at the firm, and he joins me now. Great to see you, Rob.
Great to see you. Good morning.
How's business?
Business is doing extremely well. It's great to see our portfolio doing so well. I think the last 18 months has seen a real change in how people behave, and that's been mostly to the benefit of tech companies, and our companies have been accelerating as a result.
So the past 12 to 18 months were more ones of opportunities rather than challenges?
Overall, for the tech sector, yes. I think for the world as a whole, much more challenges and more challenges to come. But for the tech sector, it's been mostly opportunities. Some of our companies have been impacted, those that sort of rely on travel or on sort of physical spaces, but that's definitely the minority. The software businesses, the fintech, the games businesses, e-commerce are all doing extremely well.
And as a firm, I mean, how easy was it to adapt to kind of, taking months and face-to-face meetings and flying here and there to meet the founders and to meet the team and really kind of, look them in the eye, to switch from that to just doing things over Zoom and maybe rapidly accelerating the whole process?
I think it was a lot easier than we expected. I think we went into sort of the late March worrying a lot about this, and could we make a remote-only investment, and would that work, and how would our companies adapt? And our companies adapted even faster than we hoped they could, in terms of really embracing remote. And actually, venture capital turns out to work very well in a remote basis. I think it only works well when the playing field is level. So when travel is completely banned, as it was for much of last year, then I think it works very well. I think where it gets awkward is around now, when some people are traveling, some people aren't. Do founders expect you to travel? Do they want you to travel? Or do they think that's irresponsible? It's trying to get the right balance at the moment on how to compete in what are very competitive deals these days.
And as you say, many fintechs, many software-focused companies had a really good pandemic. So much more of people's business and people's lives went online. Does your post-pandemic investment strategy differ at all? Are you kind of after different kinds of fintechs as the world goes back to whatever counts for normal these days?
I think we try not to let it sway us. I think we're long-term investors. We're a 12-year fund. We invest early stage, anything from seed stage onwards. So what happens over the course of a couple of years doesn't make a huge difference to what we do. So we're trying not to change our investment strategy. Obviously, we keep evolving. So whatever the latest technical trends, innovations, so open banking, for example, or new insurance regulations. So trying to take advantage of that. But having said that, we have invested in a couple of companies which are very much based around the remote work concept, not so much in fintech, more in the software space. So like a virtual events platform, Hubalo, and Riff, which is a virtual collaboration tool. So I think there are sectors which have really taken off where we might not have invested before.
Maybe we should try that virtual events platform here. But in June, you launched a $680 million early growth fund. You've raised at Balderton more than $4 billion to date to invest in European tech. What kind of returns have you been getting for your investors? What kind of, and perhaps you can share with us what have been your best, what have been your worst investments?
So obviously our returns are private, so I can't give you precise numbers. I would say the returns have been extremely good, comfortably in the sort of top quartile, and European venture as a whole has had a great 15 years, really. Our standout investments to date, the Hut Group, which is an e-commerce company where we invested at Series A, is now valued at near to $10 billion on the stock exchange. Revolut, in fintech, we invested at seed stage. So that's been a great journey to be on, and a real privilege to work with Nick and see that company really take off. When we first invested, were just starting to print their first cards, so it's great to be on that journey. And then Zego, an insurance. So Zego, we invested in an early Series A in Sten and Harry, supported them all the way through, and now raised it over $1 billion from DST and General Catalyst a few months ago.
I noticed you studiously avoided saying what your worst ones were, but there must have been
Oh, sorry, sorry, others.
one or
But
two
I know
dogs there.
that's the nature of what we do. Is there's some investments where we lose all our money. That's what we do. We expect to do that. I think the key is um, making sure that ends as well as possible for all involved. That there's a for the particularly for the staff, for the customers, and for the founders, that it's a soft landing.
You care to name any names?
There are many, right? What would be an example? So a fintech company called EYs, in insurance company called Dingy Insurance, which was acquired early, and yeah, many others. Setanta Sports is probably our most famous from our early years. We invested in Setanta Sports, which was going to be a rival to Sky, which yeah was quite an expensive failure.
Right, yes, no, I remember them. Okay, well, look, I mean, you've personally been with Balderton since 2009, but I think you started out life as a Bain consultant and then became a Googler. What made you go into VC investing?
So I spent the time at Google and decided I absolutely love the sector. I like the quant side, I like the technical trends, but I didn't like being in a big company. And so I wanted to work with small tech companies. And I thought going to Balderton for a couple of years or any VC would be a great way to learn a bit. And then in 2 years, I started my own company. And I just turned out to love it. I love the process of finding new investments. I love working with a very small group of very smart people, and then meeting great founders every day.
And I get, well, you said you were planning to be there for a couple of years, and now 12 years later, you're still there.
Yeah, still
So,
managed to persuade them to keep me around. No, it's been good, and yeah, they've become more and more focused on fintech and insurtech. It's been great to see those sectors really take off.
yeah, and fintech has really come of age pretty much since you arrived at Balderton in 2009 in the wake of the financial crisis. What was the technology or development that kind of has gotten you most excited over the last dozen years that you've been there?
What's had the most impact? Maybe not be the most exciting, as I think EMI, so electronic money authorization. So that allows someone like Revolut to start not as a bank and start issuing cards and holding balances. And that has been the enabler of Revolut, Monzo, N26, and countless other companies that otherwise could never have got going. I mean, the barriers to starting as a bank are too high. You can't prove product market fit unless you raise £20 million and wait 18 months to get a banking license. So I think what that has enabled has been really impressive. I think the current trend I'm most excited by is open banking, so PISP. So how can we do direct bank-to-bank payments? I think that has a potential to really transform the payments landscape. We have a bit of an interest in that through Go Cardless, who are expanding that area, and also Primer, who are a payments orchestration layer. But yeah, we'd love to do more in that area.
And I mean, I think the founder of SoftBank talks about just making, spur of the moment decisions based on gut feeling when he meets people and signs across whatever multi-$100 million checks. What for you? What makes you any good at VC investing? What's your kind of I don't know, special power, or maybe not special, but what makes you any good at it?
I'm not sure I'm any good at it, but I'm persistent. I think one is how you work with the portfolio, and so I think really delivering on a portfolio. I think lots of VCs make lots of promises to companies when they invest, and then don't deliver. So I think making sure that I do deliver and I do what I'll say I'll do for the portfolio. I think that takes a long time to build that reputation. You're someone who actually puts the hours in, the effort in. I think that does pay off over time. And someone once described me as the hardest working VC in London, which I took as a compliment. And then the second piece I enjoy is just seeing things early. So I started talking about insurtech, I think in 2014, 2015, and started sort of speaking about how excited I was about the sector and writing about it. And now it's sort of area that's gone absolutely ballistic, but it was great to sort of be part of that early on.
And when you see these amazing companies, do you ever kind of get the urge to kind of, rather than just investing in them, to actually try and build one yourself?
Definitely, yeah. It's lots of ideas bounce along, but yeah, it becomes harder. I'm on the board of 9 companies now, and that's something I really care about. All those companies, I want to see that journey through with all of them. So to walk away from that would be a really tough thing to do, even if there are a bunch of ideas bouncing around.
Yeah, I saw on your LinkedIn I had to keep clicking to share 5 more experience, share another 5, share another 5.
They've got to change that UX, so I've got to change my profile.
Right. Well, look, Rob, don't go away because we're going to take a very quick break, after which we're going to continue our conversation with Balderton partner Rob Moffat. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Now, Rob, I've got a few more questions for you, so let's talk a bit more about the kind of fintech ecosystem in general. Now, I know your firm doesn't just invest in fintech, so perhaps you can maybe give us some perspective here on valuations. We often, we've been talking about fintech valuations and whether they're too high or just right, or whatever the case may be. In the kind of undervalued grand scheme of things, how do fintechs measure up against other sectors, would you say?
So I'd say, yeah, at Balderton, we invest in everything, anything with a technology angle, which is increasingly everything. We're probably biggest in fintech and software, and in sort of consumer more broadly. In fintech, it varies. Even within fintech, I think valuations vary. So you take the lending sector. I think no one would touch the lending sector 2 years ago. And it was pretty hard to raise, and valuations were a lot lower. I think in the wake of the Affirm IPO, as well as sort of other sort of high-profile companies doing well, suddenly lending valuations have really shot up over the last year. I think there's always been very high valuations attached to payments companies. InsurTech has really taken off recently. So I think you've probably seen the fastest acceleration in fintech valuations over the last 18 months, especially given I think early 2020, I think fintech valuations were pretty low. There was a sort of well-publicized Monzo round. There was a struggle. And yeah, it was definitely a tougher environment for fintech funding. Then we look at software. SaaS valuations have been growing. SaaS multiples have grown extremely fast. Probably not as fast as fintech, but that valuations in that sector really increased. And consumer, yeah, we see in games, if you have something that's going really well in games, you can accrue value extremely quickly. But still, for the majority of companies raising seeded games, valuations remain very low. And I think more generally in consumer, valuations are maybe a bit lower because there's fewer sort of recent real massive success stories.
So compared with other sectors, fintech is pretty towards the top of the valuation.
It's getting towards the top now, right? It probably started around the middle 18 months ago and is now towards the top.
Okay, and do you think these kind of valuations are going to last? And if you don't, what could cause them to come down? Like, I don't know, rising inflation, rising interest rates, God forbid, another wave of COVID that causes us all to be locked down again?
I don't think at this point any more waves of COVID are going to make a difference. I think that is priced in. And then for tech, it's often a tailwind more than a headwind. I think the reality is, the reason companies are getting these $10 billion plus valuations is because kind of investors believe they can be $100 billion or $1 trillion companies over time. And I think there will be a couple of the European fintechs that reach that kind of level. There will be 100 billion plus businesses. And that justifies the very high valuations. I think some of these unicorns will end up going to zero. But as an aggregate, if you're a growth investor, if you're a Tiger Global investing in 20 of these companies or a SoftBank, you're going to end up with some great returns because that best investment you make is going to be 100x. It's going to go from $1 billion to 100 billion.
All right. Sorry, I was going to say, we recently saw, of course, you're talking about valuations and about successful companies. We saw Wise going public in London and having a very successful IPO. Do you think that perhaps this might ease the way for other fintechs to choose London to have their IPOs versus NASDAQ or NYSE?
I hope so. I really hope so. I think it's all about the appetite of the investor base in the UK, so the UK PLC, and I think traditionally it's been quite a conservative investor base in terms of where they invest and how much they value growth. And I think Wise is a great example. It's a good way to ease them in because it's a profitable business, has been for many years. It's very solid fundamentals. We're a small investor in Darktrace, which is sort of security, but mostly for the financial sector. That had a good IPO earlier in the year. Delivery share price has really taken off again over the last month. So I'm hoping that gets them comfortable with the more exciting IPOs. And there's also some work around dual share classes as well, which makes it easier for strong founders to list in London rather than US.
Okay, and just very finally and very briefly, Rob, what areas of fintech are getting you most excited right now?
I'm still massively excited by insurance, and particularly the sort of the difficult areas. So software for insurance, reinsurance, commercial insurance. So that area. As I mentioned earlier, open banking is a super exciting area. So what's the changing nature of payments over time? Those are probably the two I'm most excited by right now.
Okay, well, look, Rob, it's been a really fun and insightful conversation. Really appreciate your taking the time, but unfortunately, we've run out of it. So I just want to thank Balderton partner Rob Moffat for joining me today. Thank you.
Thank you.
And I'll be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.